Welcome to the Indonesian Blockchain Conference, the session for digital assets, specifically Investors Guide to Digital Assets. Really humbling here to have some great speakers today with us. I might just go around the virtual room and introduce everyone. So I might just start with myself. So my name is Stephen. I'm one of the supervisory board members of Asosiasi Blockchain Indonesia, or the Indonesian Blockchain Association. And on the panel today, we have Hassan from Coinbase. We have Jeremy from Gemini, Marcus from Zipmex, and Jeth from Pintu. So before we get started and me firing off some questions, I might let the moderator just play some introductory videos about some of the guys' businesses who are presenting today.
Hi, my name is Jeremy Ng. I'm the Managing Director of Gemini Asia Pacific. First, I'd like to thank ABI for including us in this year's Indonesian Blockchain Conference. So Gemini is one of the most established and secure crypto native platform, founded in 2014 by Cameron and Tyler Winklevoss in New York. And today we employ 500 professionals across US, UK, Ireland, and Singapore offices. Trust is our product. We've operated in a security-first mentality from day one. And Gemini is the only crypto platform in the world to have obtained SOC 1 Type 2 and SOC 2 Type 2 certification from Deloitte for both our exchange and custody. And as a firm, we've embraced the increase in regulatory oversight, compliance, and security. We've invested heavily to enhance our AML KYC program, implementing transaction monitoring and blockchain analysis to help prevent illicit activity on our platforms. We have a comprehensive suite of offerings catering to both retail and institutional investors. So we support direct bank deposit on 7 fiat currencies. Our mobile app is very user-friendly to buy and sell crypto instantly. And for sophisticated investors, our active trader platform offers advanced charting and expanded order types like limit and stop orders. And we also have Gemini Earn, a product that allows users to earn interest on their crypto balances of up to about 7.4% APY. Institutional investors have access to our OTC execution desk for lending and spot and derivatives trading. So what should one look for when choosing a preferred exchange or platform for your crypto investment? Number one, regulation and licensing. It is very important to check whether the exchange is properly licensed and regulated. So for example, Gemini is regulated, New York State Department of Financial Services, in UK under FCA, and here in Singapore, we are licensed applicant under MAS, Payment Services Act, and operating under an exempt status. Number two, security of custody. Gemini's custodian infrastructure uses military-grade hardware security modules. And we have $290 million US of insurance coverage on our custody, the largest in the world. Last but not least, you want to choose a platform that's user-friendly. The Gemini sign-up process is very easy, and it allows seamless fiat and crypto deposits and withdrawals. At the core, our mission is to empower the individual through crypto. So thank you very much for your time, and I look forward to the panel.
Hi, my name is Hassan Ahmed. I'm the head of Southeast Asia for Coinbase. Thank you to the Indonesia Blockchain Association for hosting this wonderful event. At Coinbase, our mission is to increase economic freedom around the world by being the most trusted and most secure digital assets platform for everyone. Today's topic is investing in digital assets in 2021. So let me offer up a few big picture thoughts. First, this technology is creating abundance. I firmly believe that anytime you empower people to create and experiment by giving them tools, and when you coordinate activity at scale, you unleash a lot of value. Through the power of blockchain and open protocols, we have embarked upon the fourth industrial revolution. We believe this is similar to the way that the railroad IPOs in the late 1800s unlocked massive amounts of value through modern corporations and stock exchanges. This is going to take it to the next level in terms of democratizing access and increasing the size of the pie for everyone. Next, the opportunity size is staggeringly huge. Because this combination of technologies is creating decentralized infrastructure and applications, all the big siloed business models that have reached trillions of dollars of market cap are up for grabs. From entire sectors like financial services, to primitives like file storage and compute, to applications like social media, everything is being reimagined and rewrapped around these open protocols. Third, we're still early, even in 2021. The Netscape moment and the iPhone moment for crypto are yet to come. You can participate as an investor via crypto assets and have ownership in these protocols. This is especially compelling for individual investors in Indonesia and similar markets where opportunities may not have been as easy to come by. In fact, we're seeing folks in these ascending markets leapfrog the developed markets from a crypto ownership perspective because of the entrepreneurial nature of the folks in the region. The corollary here is that you should take a long-term view of the space and strive to be a user owner and get your hands dirty and participate as an active investor. If you help out protocols and projects and participate in value creation, you will be able to capture some of that upside in a way that just wasn't possible with traditional instruments and traditional corporate setups. Finally, always do remember to take a step back, especially during this bull run, and remind yourself that wealth is just a means to an end. The victory is hollow if your loved ones and your community are being left behind. Especially during these difficult times, make sure to spread the love and the wealth to the less fortunate. The thing that makes crypto so unique is its community, and let's never forget that ethos. Thank you very much.
Hi, good afternoon, everyone. My name is Jeth, and I'm CEO of Pintu. A little bit about the background of myself. Before starting Pintu, I used to work at Consensus, working on cross-chain atomic swaps, a project called Equality. And along that time, I also did some research at MIT, working on crypto and economic valuations, before starting Rupiah Token in 2019. Rupiah Token is Indonesia's first and most adopted stablecoin. And in April of 2020, we decided to launch Pintu. Pintu is the first app in Indonesia that focuses on the new investing class who are coming to crypto for the first time. And so we're also the only one that's only mobile focused. And with Pintu, we're trying to solve for the mission of how do we get the next 20 or 15 million people to come into crypto, right? And so with that, we started building a vision around building a cryptocurrency bank for the mass market and for the retail market. And with Pintu, we have a long-term view that crypto as an asset class is very interesting for the Indonesian consumer class, because for the first time ever, Indonesians can invest alongside the whole world. Because prior to this, Indonesians have never been exposed to global level assets, right? They've only been investing in localized stocks, bonds, and mutual funds. And so with crypto, it just becomes a very interesting narrative for a lot of Indonesians. And so a little bit about the crypto industry in 2021. I think 2021 has been a huge year for crypto. I think we've seen massive adoption across the board, especially for the retail market, right? I think we've seen triple-digit growth in terms of users within Indonesia who owns crypto. Having said that, though, I think penetration is still very low in Indonesia. Right, I think penetration in Indonesia still sits at about 2% of the population, where in comparison, if we look at more developed countries such as the US, crypto ownership sits closer to around 20% of the population. So I do believe we've grown a lot in the last couple of months, but I think there's still a lot of room to grow and a lot of upside going forward. So that's something that I'm very excited about. We've also seen prices go skyrocket, right, from initially in the early 2021 at around 20K levels and all the way up to 65K and then now back to 30K. I think that has minted a lot of money for a lot of people. And we've also seen a lot of institutionals come in, especially in the Western countries. Not as much here in Indonesia, unfortunately. But we do believe that I think this is just going to keep growing. I think the correction in the prices itself is quite healthy. I think there's also more regulatory scrutiny, which I think regulation is good for the whole industry. And I think it just adds credibility and certainty for a lot of users who want to come into crypto. So I think it's trending positively in the grand scheme of things. A couple of tips and tricks, I think, on how to become a first-time investor or trader. I think fundamentally everyone needs to do more research. I think 2021 has been characterized by a lot of FOMO, similar to 2017 and also past cycles. I think FOMO drives a lot of people to come into crypto at the top levels without having done much research. And so a few things that I think investors should do more in Indonesia especially is researching the background of the projects, understanding the team behind the projects, understanding the liquidity of the tokens and the token economics behind value accrual in the token. I think it's also really good to understand the growth of the project, the number of users, number of transactions that the project is gaining, as well as the key value proposition. I think understanding what is the reason to exist for a certain project really helps build conviction for you as an investor or a trader. I think the other piece to that as well is to understand what's your characteristic, what's your priority in terms of trading or investing, and what suits you better. Are you like a shorter term trader or are you a medium or longer term trader or investor? I think it makes a lot of difference in how you style your investments. Something that I try to do a lot is dollar cost averaging. I think it's very difficult for myself to price or to accurately predict prices in the short term. So I would rather do dollar cost averaging, meaning buying smaller sizes positions over a longer period of time. And so averaging your entry point really helps a lot, I think, in managing the volatility of crypto. So those are a couple of tips and tricks for the viewers today. Hopefully that can help you make wiser decisions in your investment and trading into crypto. Thank you.
Hello everyone, my name is Marcus Lim. I'm the CEO and co-founder of Zipmex. I'd like to thank all of you for participating in this event. Digital asset investment in Asia has been growing rapidly. People's awareness about digital asset investment has grown exponentially. Digital asset might be a young industry, but we have to know that this industry has been around for almost a decade. Millions of people in Asia have invested and learned about crypto and blockchain along the way. During the peak bull run season by the end of 2020 to early 2021, there was a massive number of people entering this industry, ranging from retail investors and institutions. The growth contributed in the recent increment of both users in the region as well as cumulative trading volume. We founded Zipmex with the vision of providing easy access towards digital asset investments in the region. We seek to break barriers and educate people about how important it is to have investments and diversify into digital assets. We want people to see digital assets as commodities which are suitable for long-term investments. For now, Zipmex is operating in 4 countries in Asia Pacific, which are Indonesia, Thailand, Australia, and Singapore. Our vision is to be the future of digital asset banking. We saw that Indonesia has a big potential market for crypto adoption. Our data shows that Indonesia has a big number of millennials and Gen Z interested in digital assets, both for the technology and investment factors. The Indonesia Central Securities Depository, in their report in early July, stated that crypto investors in Indonesia grew by more than 50%. By the end of 2020, Indonesia only had 4 million crypto investors. It only took 5 months to grow the number to 6.5 million in May 2021. Seeing the growth makes me believe that our decision to expand into the Indonesian market was correct. As an investment platform, we want our investors to trust us. In our eyes, our investors' safety is our top priority. That's why we always prioritize the regulation and compliance in every country we work in. In Indonesia, we are registered and regulated by the Ministry of Trade under BABAPT and also by the Ministry of Communication and Information. To go above and beyond, we are one of the few exchanges to provide customers the feature of insurance from BitGo, covering a total of $100 million in digital assets. We also offer our customers deep liquidity, competitive price, and user-friendly mobile applications. So everyone from Gen Z and millennials to elders can use our platform easily. To support our ecosystem, we've also launched our native token, Zipmex token, ZMT, on December 17, 2020. This native token has helped our investors gain more passive income and access to a lot more benefits in our ecosystem, such as lower trading fees, lifestyle perks, and many more. Thank you.
Thanks everyone for the really neat introductions by each of you. I think there were some really great common themes coming out of that, which we'll sort of just unpack a little bit through the questions we'll run through today. It's interesting as well for all the viewers and the panelists as well to note that there are a lot of new users coming into digital assets / crypto in Indonesia. So I think it's really important as well for the viewers here today to note that we have 2 registered exchanges in Pintu and in Zipmex, and 2 yet to be regulated in Indonesia exchanges in Gemini and Coinbase. So it really gives everyone a great view of the local market as well as an international view or a wider perspective on the regional view as well. So hopefully the viewers can benefit from that view today. I might just jump into the questions and maybe start with you, Hassan. What do you think of the current market situation? And specifically, I know, in the last few days, we've seen quite a bullish run, but to sort of continue the bullish run, what events do you think can spark the continuation of a bullish run?
Hey, Stephen, thank you, and very excited to be here. So I think before I take for the immediate question, I just want to sort of frame up a little bit of the historical context of, how we are here. If you track the cycles typically that sort of crypto has experienced, ever since the advent of the Bitcoin blockchain, it has sort of been eerily similar in terms of these kind of 4-year cycles. For the most part, they seem to have been catalyzed by sort of each Bitcoin halving event, and then the rest of the assets have kind of followed. So one of the underlying themes there is that there still is a lot of correlation amongst crypto assets, and that's also just something for investors to be aware of along the way. Now, for the kind of recent events that we're seeing, I do think that sometimes, especially when you're starting out, you want to really take a look at what is your time frame and your time horizon for how you are investing. If you are looking at short-term trades and swing trades and all that, then I think there's a little bit of continuation that we're seeing, and there are a lot of new trends and narratives that are emerging that I think will sort of continue kind of where we are. But I do think for most new investors, it is more important to kind of zoom out and take a slightly longer term view. And maybe we'll sort of get into this a little later on in terms of portfolio construction and maybe just investor psychology. But one should take, given how early we are on everything, one should have at least one pocket of investments, which are just sort of long-term, like extremely long-term in a way that you're sort of always accumulating on. So yeah, for the near-term stuff, the things that I'm excited about, I think DeFi is going still very strong. I think we're about to see a resurgence, and obviously NFTs seem to be on everyone's mind. What's interesting about all of this is that all of the seeds for these were actually planted like 2 years ago, and we're just starting to see these things come through. So I'll pause there, and we can sort of come back for anything extra that you want to address.
Great, thanks. Might pass it on to Jeremy.
Hi, good afternoon. Thank you for inviting Gemini and myself as well. I think I agree a lot of things that Hassan has said. So I kind of would touch on 2 points. I think the first thing is, fundamentals normally don't predict short-term prices, but it will give enough time for price discovery to revert to fundamentals, right? And I look at crypto investment as a very long-term perspective. So 2 things. One is I'm looking at use cases, and the second thing is I'm looking at regulation. So if we look at just last weekend, the latest Ethereum EIP 1559, which is a major upgrade, right? In the Ethereum network that will help to make transaction fee a lot more predictable. And the market has reacted, very positively. And I think this shows that the market, in this space is still quite inefficient. That many investors are still getting, themselves to be educated about crypto and how it's going to change the whole financial system. So I think that use cases is obviously on the rise. You look at crypto as a payment, announced by PayPal, Amazon, Tesla. These are the things I'm looking at, right? And the second point is on regulation. SEC Chairman Gary Gensler has talked about Bitcoin and some other crypto regulation that how they're going to plan to regulate this space. And I think this is very important because investor protection is key to wider adoption, whether it's for retail or for institution. And when there is proper regulation, I think that's when the mass adoption can really kind of take off. And it's also interesting to say that Gary has said that this whole Bitcoin innovation is real, and it will be a catalyst for change, right? In terms of the field of finance and money. So I think I would look at these two things as something that will point towards a bullish fundamental going forward. So that's my take.
And then maybe to the local regulated exchanges with Marcus and Jeth. Maybe with Marcus first.
Yeah, hi. Thanks, David, for having us in this conference today. So I'd like to continue on with what Jeremy just said about regulation. I think this is really important. And for Zipmex, we're kind of regulated in 4 jurisdictions. And regulatory unclarity is obviously really bad for the retail market and also for the institutional market. In Thailand, for example, we're starting to see a lot of institutional interest. And because Thailand is one of the only regulated markets in Southeast Asia, and followed behind that is also Singapore as well. And so we get a lot of inbound inquiries, but a lot of the inquiries are still very much dependent on how the regulators are going to react to people being able to invest, or at least a proportion part of their treasury into cryptocurrency, more specifically into Bitcoin as well. So us as the regulated exchange are effectively the gatekeepers. We work with the regulators and we provide retail investors a safe and secure manner in terms of how they can actually invest, and actually provide them with the guidelines, and of course from a compliance perspective also to make sure that all good actors are in the system and no bad actors. The second part I think is the education piece. I think in Southeast Asia, taking a step back, finance education or how to invest or save hasn't really been afforded to the masses for forever. And I think with internet penetration in Southeast Asia, and the ability for people to have the ability to kind of look at information from around the world, I think the localization of the information is really important, not just in Indonesia, but also in the rest of Southeast Asia as well. And with education, obviously, then comes the adoption of people willing to kind of invest because they'll know more about what they were actually investing in. I think if we kind of look at the last two bull cycles, a lot of the retail investors typically kind of come in without a lot of knowledge or information about what they were investing in, simply because of FOMO. So I think our job as the centralized exchange is really not just to comply with regulation, but also to educate the market. So I think those two things are quite important. But in terms of kind of the local macro and growth trends, I think as we all know, there's a lot more participation from retail investors and also institutions that are coming in. And our job is really to provide the pathway for them to kind of safely enter into the market.
And obviously, finally, to Jeth, there's obviously a theme around regulation playing an important role into the continuation of the growth of the industry, and maybe from a more short-term perspective, the growth of this current cycle and bull market. Do you believe that as more and more countries regulate crypto, that'll help continue this current bull cycle at the very least?
Yeah, Stephen, thanks. I fully agree with that statement. I do think we're still probably in the mid-cycle phase of this bull cycle market. I think there's still a lot of capital on the sidelines who are waiting to get in, and I do think regulation will bring more credibility to our space, right? As we've seen in Indonesia, it gives a lot more comfort for investors to invest, and it'll definitely also add comfort for the larger institutional players who need regulatory certainty before they can allocate capital to crypto assets. And so I for sure, I do think that will bring more positive than negative to our space. Having said that though, there might be certain regulations that could hamper the growth of the industry. For example, the infrastructure bill right now in the United States that's being discussed. I know our friends here, Jeremy and Hassan might be tracking that very closely, but we are hoping that the outcome of that would be more positive than negative, and so that's still TBD. But yeah, in general, I think regulation brings a lot more positive than negative. With the point being that is done properly.
So just maybe segueing onto that, and Mike, just keep it with you, Jeff. So we're discussing here, like, for example, around the news around the US government and the bill that's getting passed around. How important do you think is news and things such as like Elon Musk tweets versus actual on-chain data from an investor's point of view?
So it's quite interesting because nowadays a lot of the markets are driven by a lot of the price hype are driven by retail market who tend to like follow these meme stocks, these memetics around crypto assets, and so a lot of the price discovery historically, or at least in the past couple of months, have been driven by that sort of news and that sort of like market, sort of like a influencer-driven market. Moving forward, though, when you see the dust settles, I think a lot more people will shift towards looking at on-chain data, and I think that will be a better tracker in the longer term. But usually, medium term, shorter term price cycles will be driven by like more hype type of news and marketing.
And Marcus, maybe same question to you. Like, are you seeing the growth that you guys are experiencing at Zipmex? Is that more of a result, do you think, due to things like mass media and influencer marketing and things like Elon Musk tweets, memes, rather than really true on-chain data? Especially in
definitely.
Markets like Indonesia, Thailand, Vietnam, etc.
Yeah, definitely. I think it kind of goes back to what I was saying, which is lack of financial education. And I think, because of that, there is a definite herd mentality around investing amongst friends, and there's a lot of influence, right? And I guess specifically, what we saw with Doge, with Elon Musk tweeting constantly about it, there's a huge, hype and mania that happened, a couple of months ago. But really, people just don't really understand about the on-chain data, or rather are not aware about on-chain data itself. I think the benefit of having these influencers coming on board and influencing the greater market with their followers is that it becomes pop culture and people start to be more aware about it. And I think for the curious, they would then step in to educate themselves a lot more, and that's where they'll start to dig a little bit deeper to understand what's actually behind all these different tokens and what sets them apart. So I think it is, they kind of, without these influences, I think obviously crypto adoption would be a lot slower. But having said that, it's kind of a double-edged sword. I mean, they kind of really bring a lot of that influence to the mass market, but sometimes not for the right reason. So I think people just need to be a bit more discerning, and to be discerning, I think they just need to be a bit more educated, and I guess that's our role in trying to educate them.
Cool, thanks. Maybe on to Jeremy. You touched on earlier around the recent Ethereum update and that sort of impacting price. But obviously, from the two previous answers, we've seen that there is a herd mentality, and the mass market does really follow the influencers and sort of the news. For new investors, is that sort of still now actionable, tradable events in terms of news and memes coming out and tweets coming out for new investors to sort of look at and try to essentially profit and benefit and capitalize from those type of events? Or should they really be honed in on-chain data?
I think that's a very good question. No doubt that all these like Elon and all that are pretty influential. But I'm also sensing that their level of influence will start to diminish. So for any investors, especially if you have a more long-term perspective, I think it's very important to really kind of go in to really the details and look at real statistics and data. So for example, right, if you look at from all across all the exchanges, and there has actually been a outflow, right, from exchanges to personal wallets. And what that means is that there is less and less supply, on the exchanges, and also kind of signify that the selling pressure is slowly easing off. So I think, in this scenario, it shows that, if you are looking to accumulate, for long-term holding, I think this is a good place to start. And compared to, sometime back in May, where there is actually a huge inflow from personal wallets into the exchanges. And I think that time is basically, people are looking to offload their Bitcoin, and that's why we start to see, a drop in prices, right? So that's one. And the second thing is also interesting to kind of look at the number of Bitcoin users on the Bitcoin network. So if we look at the chart, actually it has been rising quite steadily, and it's recovered, from 2 months ago to now back to an all-time high again. So that also is going to tell us that there are more and more people that are fundamentally getting to understand the technology and looking to invest in this technology over the long term. So short-term price movement is really a lot of it influenced by leverage or speculative traders, and that's something obviously is pretty hard to time. But over the longer term horizon, I think it's very important to kind of track on all this data to kind of help you position yourself as a more long-term investors.
Thanks. And maybe just Hassan, to summarize, like Jeremy also touched on another point we hadn't raised before, which is sort of the whales and the bigger traders, throwing their weight around, so to speak, and that causing price fluctuation. Do you think there's a coupling of that and things like news, or do you think like on-chain data will ultimately sort of bubble up?
So the way I think about sort of both of these is, news and tweets are important to the extent of it is spreading general awareness and is sort of helping push crypto into mainstream adoption. In sort of more kind of deeper and more well-developed markets, trading markets, news should just reflect new information, and that should get reflected in our prices, right away, because there are market makers and arbitrageurs that are sort of tracking these things. In crypto today, it's not happening because of liquidity fragmentation and because there's not enough technical infrastructure to make sure that it's happening at a kind of split-second level. Although there are market makers that are more sophisticated, and there are whales that are sort of getting at this because they can trade with size. So some of these sort of movements that we're seeing is really just a result of somewhat inefficient markets that I expect to get ironed out over time. So I wouldn't sort of take that too seriously in terms of trying to develop a trading strategy around it personally. I think the on-chain trading data is interesting, again, from a long-term perspective. But I think the most interesting example of that I've seen recently is with Axie Infinity. So if you're tracking their protocol revenues and you're comparing that to sort of pretty much every other decentralized application out there, even if you didn't know much about like on-chain analytics, if you just saw that chart, you would know something is up. Right, and they've hit sort of this kind of 1 million daily active users. So clearly there's like product market fit, and clearly the exponential growth of that is there. So again, data is just data until you can actually get signal out of it. So you just have to know where to look and what to look for. So those are kinds of examples that I think maybe, especially for kind of novice users, applications are easier to track because you can actually see what benefit they might be providing the end user. Layer ones tend to get a little more technical and require like some intermediaries like a Nansen, for example.
Thanks guys for the answer. I think just also because there might be a lot of new users out there, just the on-chain data is, because blockchain is transparent, we can see everything that's happening when tokens are being sent around, and that gives an indicative view, I guess, on the market as it happens live and now, which is, I guess, unprecedented in other sort of commodities or other assets before it, where the information might have been extremely siloed. Jadi teman-teman yang mau cari fundamental sebenarnya untuk di crypto dan digital asset sebenarnya bisa lihat yang namanya on-chain data ya. We won't get into it too much today while I have the speakers. I might actually move to the next question and fire it off maybe with Marcus to start off. There's obviously this narrative specifically coming out of Silicon Valley and really, spreading amongst the tech community that basically Bitcoin is digital gold, right? And off the back of that, we see models such as the stock to flow model sort of come out and sort of measure the sort of supply and demand metrics and where the sort of price might go. Do you guys, and maybe starting with you, Marcus, believe in sort of that Bitcoin is the disruptor or sort of gold version 2.0, and subsequently in models such as the stock to flow?
Yeah, look, I think there's been a lot of narrative around Bitcoin being digital gold. I think, a lot of the arguments made for it, is fundamentally what we kind of believe in as well. Scarcity, I think, is one of the main factors here. And, there are also a lot of, positive properties, to what we have. And the transferability, the storage, the ease of storage, just makes it so much more efficient than just having gold in its physical form. In terms of the stock to flow, I've been kind of reading up and also looking at the models. Plan B originally came out with this, and that's the alias of the person. And they basically looked at, they did a regression analysis over the last 10 years, and they looked at the expected value of Bitcoin using the stock to flow model. And I guess for a lot of listeners as well, the stock to flow model isn't a new thing that's used to determine the expected value of Bitcoin. It's actually used in gold, in other precious metal like silver as well, where they actually look at the circulating supply, and they look at how many years does it take to mine the current circulating supply. And then that actually looks at, what the implied value is. So I think so far, what we've seen over the last 10 years is that the expected value, or rather the standard deviation away from the expected value, has not broken based on the model. It was pretty close to breaking last month, and thank God it didn't, or else I think that model would be in question. But thankfully it bounced, which is great. I'm not sure who saved it, but good job. So for what we can see so far right now, I think it's trending in the right direction, following that path. A model is so good until it gets broken, and so far I think it's stood the test of time over the last 11 years. Whether it would hit $1 million as it is expected, I'm not entirely sure. Only time will tell. But we'll be monitoring pretty closely.
Do you fundamentally personally believe that it's an accurate model?
I fundamentally think so, but of course, there were quite a few assumptions that were built into it. I think for a lot of people who are trying to understand what the expected value of Bitcoin, I think in terms of, if you look at everything that's out there, this is a very simplified way of kind of arguing what that expected value is. And at least for people who want to understand, or at least to draw some, heuristics around, what that value of Bitcoin is, this is a model that is a little bit easier to kind of understand.
Cool, thanks. Hassan, you in your introductory, you spoke a lot about unlocking value and abundance. Do you also then concur that Bitcoin is the next digital gold, and that's another unlocking of value?
Yeah, so I do think that some of the fundamental premises that model is based on are, do have predictive power, and I think Bitcoin does have certain properties going for it that does sort of lend it specifically to this digital gold narrative. Things around scarcity, the fact that it was the first and that it's purposely built to do one thing and one thing really, really well. And so there is a kind of an Overton window that, is getting sort of deeper and deeper as we go into it. And so the uptime also kind of, helps sort of validate kind of some of those fundamentals. So I do think that, Bitcoin has a very deep use case going for it. And as with any investment, one should have an investment thesis for why that investment should be made. And one should periodically revisit that thesis to see if anything has changed. So far, I think it is doing sort of exactly what it needs to be doing, and it is, the best at it. I think my broader point about abundance had more to do actually with some of these other blockchains, especially Ethereum and the programmable ones in particular, because that's sort of where we are seeing an increasing surface area of new applications that are becoming really, really exciting. And even things like DAOs that are helping to coordinate sort of at global scale. That to me is extremely exciting to follow and to participate in.
Jeremy, are you a fan of the stock to flow model and the narrative around Bitcoin being gold 2.0?
Well, we even call it Bitcoin as ghosts with wings. So actually our founders, Winklevoss brothers, has came up with a report last year, October, calling it Bitcoin 500,000. And I think the basis of that was really kind of comparing gold and Bitcoin. And I would even argue that there's a lot of features of Bitcoin that trumps gold. If you think about limited supply, gold is still expanding at about 1.5 to 2% of supply every year. And if you look at Bitcoin, even though we all know there's 21 million, but actually the reality is, because we're forgetful, the overall supply is actually going to be much less than that, right? And you look at portability, I don't think it's that easy to kind of carry your gold bars around, but with a thumb drive, you can carry as many Bitcoin as possible. And obviously, in terms of the divisibility, is something that is not widely known. Is that you can buy a fraction of a Bitcoin. You can buy $1, you can buy $5, instead of just kind of holding one gold bar. So I would say that in a lot of areas, Bitcoin clearly is a better version of gold. And if you look at gold as a market cap, right now it stands at about $10 trillion. So where Bitcoin is, there's at least another 10 times before it can kind of catch up. So yes, for sure, we believe and we buy the whole theory that Bitcoin is comparable to gold, if not better.
Right. So it's more an if. More on when than an if. And to Jeth, you touched on Indonesia's low penetration in terms compared to the US of crypto holders. Do you think this narrative of Bitcoin being the next gold, and obviously there's, I think, a wider adoption of gold in Indonesia, do you think that narrative really plays out towards Indonesia? And how do you convince, especially sort of older generations, that this is a newer version of gold?
Yeah, so in terms of the adoption, I think we got to take a step back and not only include gold, but the whole idea of investing in Indonesia. Not a lot of people, as of now, invest in Indonesia, right? Investment penetration is only about roughly 2 to 3%. So tracking where crypto is, and I think already today crypto is leapfrogging traditional investing in equities and other types of financial products. So I think the homework is really not only about teaching people whether crypto is like gold or like other types of assets, but really about the concept of investing. And for a lot of older people, I do think even for older people, they tend to live on a spectrum. There are a large segment of these older generation people who are already open and warming up to the idea of investing into crypto, and we've seen this across the world, even in our own user base, although a larger chunk are tend to be younger, but we've seen a lot of people who put larger size checks into crypto come from an older age. And if you look at some of the serious guys in the US, for example, like the large hedge funds, the large institutions who are coming in, those tend to be like older generation people. And so I do think it's getting there, Stephen. And I do think these people who are coming in, who are older, are coming in with like serious sizes.
Cool. Obviously in the US, the older generation we're seeing is more, more tech savvy, whereas traditional older generations in markets like Southeast Asia are more traditional industrial businesses, if you will. Do you think there's going to be an impact there in terms of the older generation adopting in Indonesia? And obviously then more globally in emerging markets where you see, a lag in tech proficiency within older generation adopting Bitcoin?
I think there will be a lag. We can't deny that. And I think it will take more time. But to a certain degree, like believing in crypto is like it's like a religion, right? You either you have to build up to it, and either you believe in it or you don't believe in it. It takes time, I think, to build up that faith. And it's essentially the same thing with money across the world, right? If you think about it historically, money is about having faith in the government that backs up that currency. And I think over time, as you see the resiliency around crypto, I think that faith just gets stronger and stronger. And so, although it takes time, I think at a point in time when you actually build up that faith, like it's undeniably strong in whoever person believes in that, in crypto.
Just to segue then, we talked about Bitcoin quite a bit, and obviously like specifically Gemini with the Winklevoss as founders, they're very vocal on Bitcoin itself. Jeremy, do you believe the narrative that the flippening will happening? So untuk teman-teman yang mau tahu, there's a term called the flippening, which is there's talk around Ethereum's market cap flipping or being larger than Bitcoin's market cap sometime in the future. So Jeremy, I don't know, did you have any thoughts on that, or do you believe that Ethereum could outpace Bitcoin in terms of market cap? And if so,
well,
I guess.
I mean, it's really hard to say. I mean, I can't discount the possibility that could happen, but I think it's important to kind of like take a step back to look at the two assets, right? You know, they are different and they're serving different purpose. So, you know, Bitcoin, you can look at it as a digital property or digital real estate, right? And whereas Ethereum can be looked upon like a digital asset. So each of it has a different technology and different use cases. So they can actually be complementary as well. So I mean, we can see that in how the Ethereum has been trading, up against Bitcoin. It's trading at about 0.7 now. It went to a low of 0.6. And obviously there's a lot of use cases, and especially on the whole decentralized finance, apps are all building on top of the Ethereum blockchain. But still, I think, the way to look at it is really to look at it as, two different assets altogether, and each can coexist. So yeah, I can't tell you whether the flipping is going to happen, but clearly Ethereum is gaining a lot more traction in the last 6 months.
Maybe expanding on that a little bit, and for Hassan to start, like we're obviously now currently seeing a battle of blockchain protocols, if you will, between the likes of Ethereum, Polkadot, Cardano, Binance Smart Chain, Solana, and then sort of the list sort of goes on. Who do you think is going to win that battle? And how does that sort of play out from an investor's perspective?
Yeah, sure. So again, like we're still very, very early in sort of this entire kind of crypto economy. So I do think that there is experimentation is very healthy. Fundamentally, I do believe that we are moving towards a multi-chain world, and I think that's a good thing. I think as sort of we evolve and get more mature at these base level technologies, most likely different chains will have to specialize onto kind of different verticals in order to really kind of be purpose built for the end applications that they want to serve. Personally, the way I think that one of the scenarios that I think is high probability is that Ethereum kind of stays at the epicenter of this entire smart contract build out. I think other chains, as we're seeing today, will and are building bridges to become EVM compatible, Ethereum virtual machine compatible, so that developers can build applications once and then deploy across multi-chains. Because again, that's from a developer perspective, you also have to kind of cater to the needs and provide the tooling that Ethereum's already sort of built out. So I think that reusability is very, very important as we sort of go across these multi-architectures. So at the moment, I do think that most chains have an uphill battle in terms of commanding developer mindshare over Ethereum. Different chains are sort of have had their moment, but I think over the long run, it remains to be seen how exactly they will become competitive. So today there's a lot of chains. I expect there to be some consolidation, but it will be more than one for sure.
Marcus, do you sort of share that view, especially, you know, when you open up and sort of lists, for example, an IDR pair with a new chain on Zipmex, you're exposing your users to obviously a new chain. So there's obviously some consideration that you guys do internally there. But fundamentally, do you guys sort of, who do you think is going to win this this platform war, if you will? Are we going to see sort of consolidation as we sort of saw when, you know, when the internet came out with different types of standards and it's sort of consolidating? Over to you, Marcus.
Yeah, so I think kind of looking at that question, if you have the view that it's a winner take all, then the answer is finite. So you're looking for one answer. But I think we're of the view that it's not a winner take all. I think there would be different characteristics that each chain will bring, you know, to the ecosystem. Obviously the front runner at the moment is Ethereum, but there are a lot of other chains as well that provide a lot of, you know, beneficial properties that are trying to solve the problems in very different ways. I think, you know, if kind of looking at how the internet started out as well, is that you have a lot of competitors, and to your point, I think there'll be consolidation. So I don't think there'll be a complete winner take all. I think, you know, like what Hassan has mentioned, it would be kind of working in combination of, you know, multiple different chains altogether. You know, what's really good is it actually is, you know, it's beneficial for the market in terms of, firstly, I think, you know, for the investors to understand, you know, how all these different chains operate and what the benefits they bring to the ecosystem. That's one. Secondly, I think in terms of the development of the talent, the engineering talent, that's also really good for the market. You know, Ethereum at the moment, or the foundation itself, has probably the most amount of engineers working on it. And I think the challenge as well is for the other chains to be able to pull across, you know, that pool of talent, which will be the challenging part, because ultimately I think it's the talent that will help to define. The last thing is obviously the adoption. And I think the adoption and also the network effect is extremely important. So we're starting to see that. Well, I mean, Ethereum obviously has the most, so that's still the dominant at this point in time. But I wouldn't say that, you know, it has to be a winner take all game.
Sure. And Jeth, like, for example, like if I'm a newbie investor investing on Pintu and I'm looking at all these different chains, for example, that's listed on your platform, you know, what are the characteristics am I looking for to pick where should I put my money?
Well, that's a very tough question. And unfortunately, for a lot of retail investors, that's very much driven by Elon Musk like tweets and the memes around crypto, right? Unfortunately, that's the case. And for a lot of people, like, and including, like, I think if I think back about my own journey into crypto, you know, I came in and invested first before actually learning about the space. Like, it's easier for you to learn once you've got money invested into crypto, right? And I think that's also the case for a lot of people. They'll put a portion of their wealth into it and then start learning as you go. And from what we've seen, a lot of people are actually really bullish about the more recent trends around layer 2 solutions, as well as like the new and upcoming crypto blockchains. Although we haven't listed them, I think there's a lot of interest around Solana, around some of the newer chains. But having said that, I think in Indonesia, you know, because of the lack of education that Marcus also mentioned earlier, there is a lot of interest as well into blockchains that might not be as popular amongst developers and builders and you know, blockchains such as potentially Cardano and whatnot. But I think we're at a point in time in Indonesia, at least, where, you know, people are still learning and we're still catching up. But it's tough to say, like, it's tough to say who would win. I think I agree with the other panelists here that it's going to be a multi-chain future. Different use cases will thrive on different blockchains, I believe. And so for us as platforms, and I'm pretty sure everyone here agrees, like, I think giving choices to the end consumers is probably the most important part of our job, and like we'll let the market decide on who they choose to use in the future.
So, like, I think I agree. Like, I think we are moving to a multi-chain environment. There will be consolidation. One of the biggest pillars driving the growth of some, if not all of these current platforms is DeFi. Jeth, you touched on the fact that crypto is kind of like a religion at the start. So one of the biggest narratives coming out over the last 12 months, especially, is obviously DeFi. Just going around the virtual room as well and touching on this trend of DeFi. For investors that are watching, like big trends like this obviously can help drive the growth of the ecosystem. And there's a reason why a lot of people who've been in the industry for so long are excited, for example, with things like DeFi. And just going around with the room, maybe just staying with you, Jeth, to start, like which part of DeFi do you specifically think will be the most disruptive threat to the current centralized financial ecosystem and players such as banks, insurance companies, etc.?
Sure. Thanks, Stephen. I think there are multiple use cases. You can't really hone in on one. I think the core pillars around DeFi, such as exchange, borrowing and lending, those I think will thrive and continue to snowball into the future. If you think about the core products of banking, it's pretty much borrowing and lending, right? And I think that will already, if not already, starts to eat up into traditional banking's market. And I think a lot of large banks actually start to realize that. And I think we've started seeing news around the world where large institutional banks are starting to participate into DeFi. I think, for example, Aave, one of the large players in borrowing and lending DeFi, are starting to open up that arm for more institutional players to come in. I think I'm bullish on those two use cases, for example, but I'm pretty sure a lot of other use cases will also thrive going forward in the future. Because if you think about it, fundamentally, it's all these services that banks provide will be provided in an open manner on top of the blockchain and with very little barriers to entry for a lot of people.
Jeremy, do you have a specific part of DeFi that you think is going to be the most disruptive or basically the killer to the current centralized ecosystem, financial or insurance or centralized ecosystem? And if so, when do you think this disruption is going to happen? Do we have to wait, for example, 20 years like we did for the internet?
I think this point I have to agree with Jeth, that there's really no one single application that is going to be the killer app. But specifically, I like to talk about lending, right? I think it's really interesting that if you look at, because of DeFi, it helps to eliminate the distinction, right? Between whether you are a ordinary, retail customer or a high net worth institution. It makes no difference. You go into the protocol, you can stick your coins, you can borrow, you can lend, and you get the same kind of rates, right? So I think that this intermediation is powerful. It is something that the general public, will understand and appreciate. So, so that particular piece, I'm very bullish. And I think it's also interesting to note that if you look at back in May, where we have the huge crash in the market, the DeFi space, there wasn't a single breakdown. There isn't, collateral that was not sufficient to cover the loans. Unlike, what we see in the financial world back in 2008, where we need central banks, coming out to bail out the financial system. But in the DeFi space, it continued to operate. I think that is a huge testament. I think that is a real test. And I would say that at least at that point, DeFi has passed that test. So I'm personally very bullish in this space, but I just can't tell exactly, which part of it will be the emerging winner. I think, every single part is going to be beneficial to.
May I ask,
what
like,
we're living
you
in.
guys launched sort of your version of staking. You mentioned earlier in your introduction that you get around 6% or so APY. Have you seen massive growth in users taking on those types of, which is fundamentally a more DeFi feature, which you probably traditionally didn't have before?
So that product that we have is called Gemini Earn, which essentially investors can lend out the tokens that they own to earn an interest. So that's a little bit different from staking. But to answer your question, ever since we rolled out that product, we have seen a huge inflow to that. And I think especially because the market has been very volatile in the last couple of months. So people are actually happy while they are hodling their asset. They can earn the interest while waiting. And there's also another part that do threaten the traditional banking world, whereby interest rate is almost zero. You just don't get paid, right? For the cash that's sitting around. But in your crypto tokens, you actually can earn yield while you're waiting for the price to appreciate.
Marcus, onto yourself, and specifically, you guys are operating in Southeast Asia and Indonesia specifically. Like, are you looking to leverage some of these DeFi applications, if you will, like earn and staking, to sort of get users introduced to that, but also ultimately carve into some of the market share of the centralized players?
Yeah, definitely. So I think for Zipmex at the moment, we offer the Earn product. We offer that across all jurisdictions that we're in. And we see there's a huge kind of uptake, especially for people who don't trade regularly, because I think there are different profile investors. There are some that are just getting in and out all the time, and then there are some that are just buy and hold for a long term. I think the Earn product is very attractive to those who are just buying and holding for the long term, because prior to 2017, call it, there was really no Earn product out there, and most people just would draw that to their cold storage wallet and just leave it in there until they're willing to sell it. So I think that has been really attractive, and I think the role as as an exchange or regulated exchange or platform is to be the bridge to DeFi. I think ultimately the whole DeFi world is very complex for a normal investor, and I think that the term of CDeFi is where we would like to play, where we become that bridge and become the gatekeeper to the DeFi world. But going back to your question around, what would disrupt, kind of the, general traditional banking, I think you've kind of alluded, or a few people have already alluded to this. I think that the staking element and also the interest element is very attractive at the moment, especially from, looking at macro trends. All banks are offering pretty much 0% interest. Whereas the DeFi world, even in the DeFi world, is also offering north of 5 to 10%. So I think the flow of funds will move inevitably, I feel, from traditional banking to this space. How sustainable it is, I think, is a question. Because the rates that are being offered in DeFi and also in DeFi, is because of the inefficiency of the market. So when the market becomes a lot more efficient, would that pair out? I think the theoretical answer is yes, but I still feel there's always going to be an efficiency in the place. So, there will always be that gap. But just looking at DeFi, I think in terms of the whole infrastructure, it's super new, of course. Programmable banking is super disruptive. I mean, looking at the ability for people to kind of borrow, lend in a very seamless fashion without any centralized organization coming into play is amazing. And I think, central banks are still trying to grapple with this, because ultimately central banks, their main policy is, macro policy, right? So how to actually control the inflation of the economy. And this is completely outside of any economy. It's a different economy in itself. So, I think it's really super exciting, but I think only time will tell in terms of how it will shape out.
Yeah, thanks. And maybe last but certainly not least, for Hassan, one of Coinbase's angel investors was actually quite vocal in I guess propping up Coinbase as sort of a disruptor to banks. Essentially, it's a new age bank, or can be that bridge that Marcus was alluding to earlier between the centralized world and the decentralized world that we seem to be moving towards. And you also mentioned unleashing value in Industry 4.0. So is DeFi the key to, for example, Coinbase being that bridge and the disruptor towards in disrupting centralized banks and moving towards a decentralized future?
Yeah, I agree with everything that's been said. I think one of my favorite memes these days is fintech on the front end, DeFi in the back end. And I think that's sort of the world that we're moving towards, where, we've, especially kind of from the e-money days and some of the last 10 years, we really kind of, nailed down the user experience of how users in particular on mobile, want to receive their banking and banking-like services. So that was sort of, what was happening on the front end side, where all the fintechs were eventually sort of, plugging into legacy pipes and legacy settlement systems. So what we're seeing with DeFi now is all of that kind of back-end architecture is sort of being rewired. And so especially, with stable coins as an example, the way that cross-border settlements work, frankly, with, blockchains, there is no concept of cross-border, it's just a settlement. So, so I think that, making these two sides meet is very exciting to us. And we think that it's really going to start delivering, these types of solutions at scale, frankly, on steroids. And so I think many of us sort of, in the room are sort of benefiting, from being sort of positioned, towards that. That said, I do think banks will have an integral part to play no matter what. Again, these are technological changes, right? And change creates winners and losers. And it's just a question of, which banks are going to adapt to the change that's coming. And there will always sort of, be a need for depository institutions in particular, especially in the fiat side, that will sort of underpin, I think, a lot of what we are talking about today, because we also aim to, be regulated and sort of provide these kind of trusted and safekeeping solutions. So I think there's some combination of it, which will endure. But at the end of the day, the value to end consumers for banking services and access is going to explode in a way that we've not seen before.
Yeah, thanks. I think, I'm a big believer as well in a convergence of trends, and you touch on the fact of things like e-money and things like that. Another big trend coming up sort of outside of crypto for now, but sort of really converging really quickly and has everyone in the crypto space really excited, is the theme of central bank digital currencies. We see the likes of, for example, digital yuan, and then Indonesian central bank has also announced they will launch a digital rupiah, and we're seeing sort of similar trends around the world as well. Coming back, maybe just to you, Hassan, first, how do you think trends like, CBDCs and central bank digital currencies impacting and sort of playing together with banks as well as the current players in DeFi? Because traditionally, banks take a bit more of a traditional approach, and we see sort of entrepreneurs and engineers who are operating in DeFi take a bit more of a riskier, or I would say venturous approach. How do you see, from a catalyst of CBDCs, these two worlds sort of colliding?
Yeah, I think it's great validation for kind of blockchain as a technology and decentralized consensus as a way to make things work in a way that hasn't been done before. So the fact that we're seeing this level of interest from so many governments and government agencies and central banks around the world, frankly, 5 years ago, I don't think anyone would have really expected that. When you go to Davos, like this is like the #1 topic that everyone wants to address. So it is very exciting from that perspective. I think where sort of this is headed is, sometimes it's interesting to think about that. If in this day and age, I don't think that governments would have invented paper cash because of sort of the leakage issues that it has, or so the surveillance issues that it has. And so I think CBDCs, frankly, are really aimed at replacing that, and really kind of moving out of paper cash and into a world where they can really monitor all of their economic activity in a way that just wasn't possible before by harnessing this technology. So I do think that private players around like sort of e-money and whatnot, they might be sort of disrupted a little more directly, but for the most part, I do see it as a just overall positive development for the space as a whole.
Jeremy, what's your view on CBDCs impacting sort of the traditional market, as well as, hopefully growing the DeFi/crypto space?
Yeah, I see CBDC, being able to coexist. Like I mentioned, look at Bitcoin as digital property. You've got Ethereum as digital asset, and CBDCs are digital currencies. I mean, the only difference, obviously, is centralized. But there's a lot of merits, right? Because it will bring forth instantaneous payment settlements. You remove black market transaction, you reduce costs and increase efficiency, right? So I think all these are positive. But clearly, there are also certain things that might come as something that people might not like, and that includes privacy. So I think as long as that can be balanced, I think it is like Hassan said, it's a validation of DLT or blockchain technology. So for me, I think it is a positive development overall.
Marcus, for CBDCs, why do you think investors around Southeast Asia, specifically in Indonesia, why do you think crypto investors should get excited about trends like CBDC and how they collide with crypto?
Yeah, so I think if we look at the trend in Indonesia over the last 5 to 6 years, we've seen kind of internet mobile penetration, e-commerce penetration, and then we saw a huge wave of basically digital wallets or e-money coming into the system. And even with e-money, there are still a lot of limitations as to how it can be used in Indonesia specifically. If you look at China, they don't have the same type of limitations. I think where Indonesia is definitely going is towards a more digital economy. And I wouldn't think that would have been possible 5 years ago when I first came to Indonesia. But where it's kind of how the kind of the landscape has completely shifted. I think for the retail consumers, this makes a whole lot of sense. And obviously with what's happening with the pandemic, obviously people don't want to touch notes anymore. I think a fully digitized way of transferring money makes a whole lot of sense. From the government's perspective, because Indonesian rupiah is a controlled currency, so it's not like the US dollar, Singapore dollars, or the Australian dollars, where it can be kind of transmitted quite freely. There's still a lot of controls in place. And this is, I think, the challenge that the government would have to think about. And of course, I think in terms of the infrastructure of how they want to build this out, because there has been kind of mentions in the media, but in terms of how much capabilities they have in-house is still a question mark. And I think in terms of how this would kind of impact the rest of the ecosystem, of course, I think once there's interoperability, then the money can be transferred pretty much anywhere where it can be accepted. So I think there's a lot of positive kind of benefits to the progression of CBDCs, but I think it needs to be a bit more well thought out. Indonesia is not the only country that is trying to implement it. I mean, Thailand's also trying to implement this as well. So the BOT in Thailand has also spoken about this, but in terms of how what their plan is to put this together, I think it's we still need to kind of understand a lot more.
And last but not least, to wrap up, obviously, Jeth, you're at the forefront of this in Indonesia between Pintu and rupiah token. How do you see CBDC sort of playing out specifically in Indonesia, and what are you seeing sort of firsthand between the two ventures that you have? Oh, I think you're on mute.
Sorry for that. I think it's going to be super interesting. CBDCs, at the end of the day, the best product market fit is essentially cross-border transactions and being able to move your essentially your fiat freely, right, on open rails. So I think that just unlocks a lot of use cases, whether it's like what we've touched on earlier, DeFi, or even into more real-world use cases where it's used for export-import trades and whatnot. I think the use cases are not the point of concern. I think the point of concern would probably be coming more from regulations and how the government potentially sees this conflicting with their own agenda around capital controls, capital flow controls. So I think it's going to be super interesting. I think it's definitely a space to watch, but there's also certain hurdles or certain things that we probably need to pay more attention to together with the government.
Right. Before I open it up to the question from the community, just to wrap up, I guess, we've seen a lot of, especially this year, a lot of new investors enter the market. And in light of everything we discussed through the questions today, for new investors here in Indonesia, what would be your advice to them on structuring their new crypto portfolio? Might start with you, Jeth.
Sorry, your question was around crypto portfolio?
Yeah, so if I'm a new investor looking to start my my journey into crypto, how best should I sort of construct my the composition of my crypto portfolio?
So if I was a new user, I'd definitely start with the blue chips, so to speak. Bitcoin and Ethereum. I think there's a lot of I think it's more stable compared to some of the other more volatile crypto assets out there. It's also historically been in the market for a longer period of time. It's already shown its resiliency, and so I'll start with them and start understanding their value propositions and what their characteristics are like and what's their use cases before moving more into your DeFi. And then once you start into DeFi, I think you can't go wrong with the DeFi blue chips as well. So that's how I would structure my own portfolio.
And just for the newbies' benefits, is Dogecoin a blue chip?
Well, at this point, I think it probably is, right? You really can't get away from it.
Maybe using that question as a segue to you, Marcus. How do you sort of help newbie investors sort of construct the composition of their portfolio? And yeah, is Dogecoin a blue chip?
Yeah, so I think for newbie investors, I think to take a step back and just not just look at crypto, but in general, investing in general in Southeast Asia, more specifically here today in Indonesia, right? I think it's about how do you spend and then how do you save and how do you invest? These are three key things, right? And I think in terms of investing, I think there's, what's really amazing for Indonesia right now is there's so much opportunity and that opportunity is growing so fast. I mean, you've got a stock market, there has, increased amount of participation. And, recently Bukalapak has just IPO'd to the first tech company to list on the Indonesian Stock Exchange. And then you've got a booming crypto industry in Indonesia as well, where, as Jeth has also mentioned, the user adoption has grown significantly. I think kind of 101 of investing, firstly, is always to kind of read up about what you're investing in, and assuming that, the users have already done that, or the investors have already done that. And then I guess to Jeth's point as well is about, understanding your risk appetite. Because I think there's two spectrum of investors, ones that are, risk averse, and then ones that are, taking a ton of risk. And so you need to understand what your risk appetite first is. If you are, very risk averse and you want to delve into the crypto space, then the blue chip makes a whole lot of sense, right? And I think in terms of kind of portfolio allocation, I would allocate, more than 50% to the blue chip, or at least 50% to the blue chip. And that could be 50% into Bitcoin for that matter, right? If you're a huge risk taker, then to your point about Dogecoin, right? Then you could potentially have more appetite for that investment as part of your, broader portfolio. So I think, to answer the question about portfolio construction really comes down to what type of investor are you? And you need to answer that question first. And at least you need to answer that for the next 2 to 3 year horizon, because you can't say I'm really risk taking and then tomorrow you're not risk taker and then the day before that you switch. So you need to be, you need to have a firm view of how you want to be investing. And then with that, then you take a calculated approach as to how you're going to form your portfolio. So I guess for some people, what we've seen in Indonesia, especially in the last 5 to 6 months, is that they've basically leapfrogged investing into Bitcoin and go directly into altcoins, which is really quite amazing because the trend before that was they leapfrog the stock market and go directly into crypto, and we see that massive adoption in terms of user accounts created in Indonesia. And then for those who are starting to invest into crypto, typically people come into Bitcoin first, Ethereum and Litecoin and whatnot. Now they just go directly into the altcoins, whether it's the DeFi or whether it's meme coins. It's really, really fascinating to see that. But what I would say to the viewers is to take a step back and rethink about what type of investor you are before you start to redefine your portfolio.
Maybe to Jeremy, this is obviously, to be honest, like a question, I guess, Marcus and Jeth and myself here in Indonesia, we get asked this a lot from our friends, family, and obviously from their new users, like, which coin should I buy? So, for newbies, specifically like in Southeast Asia, what advice would you give in terms of like crypto portfolio construction?
Yeah, I think the other panelists have kind of laid it out quite clear. So I'm just going to make a couple of points, right? If you're new to investing into crypto, I think first and foremost, the most important thing is to choose the right platform. Find a platform that is regulated, that has proper security to protect your asset. I think that is key, right? And then number two, then you start looking at research on the different tokens technology. And it could be Bitcoin, Ethereum, or DeFi. Each has its own use cases. And then size of investment, for a long-term investment, start with 5%, don't start with everything, right? And then be patient and not be FOMO. Have a plan to accumulate, when it goes down, because you've done your research, then you're convicted on what you're investing into. So in terms of what tokens you're going to choose, I think really depends on your risk appetite. But I would suggest that to have a well-diversified portfolio, just like investing in the equity market, you want to have some higher beta, higher volatility, and some with lower volatility. And just sit tight and wait for it to slowly rise in value.
And Hassan?
Yeah, I really like what Marcus had said, and I want to build on two of the concepts he touched on. So one is just around your risk tolerance. This took me personally, years and years to really sort of get deeper on. And what I discovered about myself is that I can be both risk averse and be both risk leaning. And so the way that I try to sort of segment my investments now is that I have a long-term holding that I actually keep in a kind of separate sub account, and then I have an active holding that I sort of look at more frequently and plan my trades more frequently around. So I do think that especially for new investors, you should consider like some of the blue chips that were mentioned. One sort of particular construction that I particularly like is Bitcoin, Ethereum, and DPI, which is an index on DeFi. So that's like a BED portfolio. So you can consider that as a kind of one that has endurance. Now, the other thing that Marcus had mentioned that I want to touch on is this notion of spending, earning, spending, and saving. So because crypto, you should think about crypto more sort of on a VC lens because we're so early, and there are actually earning opportunities within crypto itself. So between sort of the play to earn trend that we're seeing with Axie and these other games coming up, and between being able to contribute to DAOs and projects that you like and be able to kind of earn in return, you can actually, earn your crypto sort of on a risk-free basis because it's your time that's being invested. And then you can use that as your kind of trading stash. So I do think that there's just, you should take the broader view of like all the opportunity set that's available to you because it's a crypto economy. It's not just sort of a pure kind of investing play. That's an important part of it. It's a start, but there's more to it than that.
Right. Before we move on to the user question, I'll probably just add on, having spent a lot of time in the industry here in Indonesia and understanding, I guess, the nuances of the market. For a lot of the viewers out there, I think the only one thing that I would add on top of the speakers today is in Indonesia, usually when you're new to an investment, there's a culture of using the word play, like main. Jadi kayak, bro, aku main crypto, atau bro, aku main saham. Instead of like investasi or investing. So I think shifting out of that bermain mindset to invest mindset is a real key, because if you don't shift outside and ganti pikiran ya dari bermain ke investasi, you might really miss out on a huge opportunity of which I think was touched on today, everything from DeFi and unlocking value. And we're still very early on, as Jeth said as well, especially in Indonesia. So for the new investors watching, I think, changing your mindset on crypto and washing away the previous stigma that's sort of been lingering around crypto, and really learning about what it is for yourself and making the best choices. I think today we had great speakers, and we have one question because we ran over time. So there's one question from the community, and I might just start at Hassan quickly. Do you believe that broader regulation will increase confidence into the crypto market? And as sort of centralized exchanges, do you guys sort of plan and preempt your business in terms of like what regulation might come up, or are you sort of more reactive to things that come up?
Yeah, that's a great question. So I think it was, what was said earlier was correct, that regulation ultimately increases trust, and trust is what will lead to mass adoption. We're still very, very early. On centralized exchanges and overall kind of ownership, we're starting to reach, a kind of post-early adopter phase at this point. But within DeFi, just for reference, like Uniswap, the biggest DEX, has cumulative 3 million unique wallets that have ever interacted with it. So it just goes to show that, it's a long journey that we have ahead of us. And I do think that regulation overall will help increase that confidence that users are looking for to get started. Now, in terms of regulatory shaping, because this industry is so new and it's a combination of technologies, we do believe that advocacy and regulator education is a very important part of our mission, because they're a very important stakeholder in helping grow this along. We sympathize that they have a tricky balance that they need to hit between investor and consumer protection, AML regulations, and balancing innovation and business need. And so that I think that all of us collectively feel that as part of our responsibility to engage with regulators early and make sure that we're shepherding this new technology as we go along.
And Jeremy, what are your thoughts on that, especially with you guys in the US as well, and navigating the ever-changing regulatory environment there? Are you guys sort of more proactive or reactive to sort of regulation? And do you see sort of with more and more regulation broadly across different regions, that really aiding or sort of more conflicting because there's no, I guess, uniformity within regulations of certain within jurisdictions sometimes?
Yeah, I mean, for us, we've always been very pro-regulatory compliant. I think for us, it's always been, our ethos to work with regulators to ensure that, there's going to be proper protection for consumer, because like I said before, right, without proper consumer protection, it's going to be very difficult for wide adoption, and especially for institutions. They like to see things have been regulated. So a lot of them are actually waiting for more clarity before they kind of come in a bigger way. So for us, I think this is a plus. Yes, it's going to be difficult to have a unified framework to regulate across all the different jurisdictions, but at least there is still framework that we can operate under. So for us, we're always having very open conversation, being very proactive instead of being reactive, because I don't think that is the way to kind of play the long game. And for us, it's always been going after the long game.
Thanks. And Marcus, you operate across the APAC region and you're navigating sort of nuances and different interpretations. Do you guys sort of take a proactive or a more reactive approach into running your business in terms of navigating regulation?
Yeah, definitely. So we do definitely take a more proactive stance. And the way we do this is, we have been quite fortunate to be able to deal with a lot of different regulators in this region, Thailand, Indonesia, Singapore, and Australia. And what I can say is that each regulator have their own nuances and their own focus or slant as to how they want to be regulating the industry. Singapore is predominantly very keen on AML KYC, right? Money flows. And so, the travel rule, which I think everyone knows here, is something that's, top of mind, and they're pushing everyone to kind of implement for it. If you kind of look at the other regulators like Indonesia or Thailand, this whole concept of travel rule hasn't really appeared yet. But we are taking the proactive steps in trying to implement it as part of our kind of infrastructure. So, the way we see it is, we understand how each of these regulators are trying to operate or what is their focus. We take the best bits out of all the regulators and try to cohesively put this together. And we can see that, for example, the travel rule or KYC, which, Singapore has been trying to push for, we know that that's going to be coming up with, the Thai regulator or the Indonesian regulator for that matter. So we are trying to be proactive around it. What's hard there are some parts that we would have to be reactive. And I think that is really kind of dependent on how the regulators react to, other players in the market. And with, for example, in Thailand, we've seen, regulators coming out very directly and almost in a very short notice, putting out a law on, what tokens can be listed or can't be listed. And that's a very knee-jerk reaction. And so that we can't really be proactive around. We can only kind of be reactive. But ultimately, like everyone said, I think, regulatory is a good thing. Regulation is a good thing, builds trust, and we all kind of agree it has positive benefits to the ecosystem. But the key thing to also take note is over-regulation is bad. And I think the regulators need to understand that. And I feel like the challenge with the regulators is that, firstly, they're in a field, or at least that segment of the regulators, they're in an industry that is growing at 100x compared to all other industries. And the amount of knowledge sharing that is required needs to be almost at the same pace. And undoubtedly within the regulators there will be churn. And so what we see sometimes is we have one, whether it's dealing with the Indonesian regulator or the Thai regulator, you have people there that have the know-how of how to regulate, and then they leave, and then they have new people coming on board, and then they don't understand the whole industry, and then we have to kind of start from ground zero. So our role is also to educate them along the way with new entrant, or rather kind of new talent that's coming into the regulators. We need to kind of educate them and work hand in hand with them to continue that dialogue moving forward. I think that's really kind of the challenge for us.
And finally, to you, Jeth, obviously you're very intimate with the regulators here domestically, and it's an evolving situation as we sort of go to beyond just regulating exchanges, and now sort of the discussion with tokens, taxation, etc. How are you guys approaching regulation, and do you sort of see that as a huge positive now that we are regulated in Indonesia, obviously fourth largest population in the world with clear regulation, but at the same time, like, is it a double-edged sword?
I think it's a huge positive. I think it can be a double-edged sword, but I think first and foremost, it's a huge positive. I think we need to count ourselves as being lucky that our regulators are very pro-crypto. I think if you look at some of the other large large Asian countries around the world, such as China and India, they haven't been so lucky. And so we need to count our blessings here and take it as a more of a positive thing for the whole industry, actually, not just Indonesia, right? And I think the double-edged sword comes in when you start. I think it will come in more when you start talking about how that relates to decentralized finance, DeFi, and some of the use cases around crypto and blockchain, because then you're talking about unrestricted capital flows in and out, and then also use cases that are uncensored. And I think for the most part, I think historically governments have overlooked those use cases, but we've always been promising our users that this is really like one of the benefits of using crypto, but at the same time, it comes at the detriment of oversight from government. And so that's, I think, where things will be a little bit more tricky. I think for us, at least for Marcus and I, for example, we've so far we're trying to preempt and be at the forefront of regulation, working closely with the regulators here in Indonesia. And so, for example, Marcus and us, we're working on DFX, which will be Indonesia's first futures exchange for crypto assets and digital assets. And I think potentially it will be the first regulated futures exchange in the world. And so doing stuff like this together with the government, I think will set a good precedent in Indonesia and actually also for the whole crypto industry. So yeah, I do think it's more of a positive thing, and we try to keep ourselves at the forefront of it.
Thanks, guys, for your time today. That's unfortunately all the time we have today. I think we covered quite a broad range of topics, so really hopeful that the viewers today and subsequently can get a lot of value out of the discussions today. I think a lot of Indonesian investors who enter the market are quite new and they simply just want to buy Bitcoin. So hopefully the discussion that we've had today has enlightened them into the constellation of other opportunities and things that are happening in the digital asset space, which is why it's so exciting and why there's huge room for growth. So personally, thank you, Jeth, Marcus, Jeremy, and Hassan for your time. For everyone who wishes to engage and connect with them, obviously Pintu and Zipmex, you can sign up, and they're regulated already di bawahnya Bapepti sama Kominfo. And also follow them on social media. For our friends at Gemini and Coinbase. You can follow them through their socials. And for the speakers today, I think they're all on LinkedIn. So I guess for any viewers who want to connect with the speakers today, I think you can connect to them directly via LinkedIn and just reach out to them. And I'm sure they'd be more than happy to help out. Again, guys, thank you for your time today. Hope to catch up with you again soon. Thanks, guys.
Thank you very much.
Thanks, everyone. Thank you.